Ladies and gentlemen, welcome back to the channel. It appears as if markets are somewhat crashing today. Over here on my screen, I have Microsoft down 2.7%, Apple down 2.8%, the Nasdaq, the triple Q is down 1.85%. You do have Tesla down about 5%, Nvidia down 1%. Across the board, quite a bit of red. The S&P 500 currently down about 1% as well. So what's going on today? I want to put this into context so everyone understands fully kind of what's happening. Now, AMC stock is in the green today by almost 1%, which is quite remarkable. I'll just say that. It really makes me kind of think, like, if markets start to do well from here. I mean, if AMC's holding up 1% green when the S&P's down 1%, the Nasdaq's down almost 2%. These other higher quality stocks like a Microsoft and Apple are down 3% apiece. You know, what's going to happen when the markets are better? Is AMC stock really going to start performing, better? Maybe that is a logical conclusion that we can make. Nonetheless, I'm going to go over what's happening in our markets today. And, we do have some very encouraging things with AMC specifically. The biggest thing that happened today in our markets was ISM service PMI. Now, the biggest thing that I talked about that was going to be important was ISM services prices. Now, this came in at 58.6. That was much better than expected, so that was good news. But not everything came in that good. ISM Services PMI came in at 52.6. The estimate was 53, so that was lower than expected. Overall, that should have been good news for markets. Factory orders month over month came in at negative 3.6%. Estimate was negative 2.9%, and last month was revised negative 0.3%. Factory orders excluding transportation came in at negative 0.8%. Last month was revised to negative 0.3%. ISM services business activity came in a little bit on the hot side at 57.2. The estimate was 54.9, so almost 3 points higher than expected there. ISM services employment came in at 48. The estimate was 50.4, so that was good as well. ISM services new orders came in at 56.1. The estimate was 54. So new orders definitely came in a little on the hot side. Definitely a little bit more activity than maybe what the markets were expecting overall in services. Now, prices again came in at 58.6. The estimate was 63. So that should have been really good news. Now, I think a couple things are happening here. I think to one degree, the markets, they've rallied so aggressively already. You've priced in a lot of good news into markets, right? If you just look at the S&P and look at where it's at, one, you're probably due for a pullback or some kind of correction, like a larger term downtrend. That's true, at least from my perspective, that's true. But also, I mean, you've priced in the good news, so even when you get good news, it's sometimes a sell the fact kind of situation. The other part of this is you are going to have Fed Jerome Powell that will be speaking tomorrow, and if someone knows something somewhere, then maybe they know Powell's going to be hawkish. It's really hard to tell. We have had CPI reports for the month of January come in hotter than expected. CPI, PPI, PCE. Maybe Powell is going to drop some kind of new information on us. Typically, that's not really the outlet in which Powell does that. But if he does want to temper some people's expectations about rate cuts or when rate cuts are going to start more specifically, he could give markets some kind of guidance there. So maybe it's a little bit of pre-Powell jitters that markets are feeling today. And I think when you mix those two things together, boom, that makes sense why stocks are falling so much. And again, the stocks that are really taking a beating today are a lot of the stocks that have done very well to start 2024. Like, let's be honest. You've seen an average full year's worth of gains in the first 2 months of 2024. You should expect to see some kind of pullback or weakness. It's actually absurd how bullish markets have been. I mean, even in 2020 and 2021, when you had the Fed printing money, the government spending money like they're drunk, the Fed literally buying assets, buying, bonds and mortgage-backed securities, artificially keeping rates super low. I mean, you had more volatility to the downside then in that period of time than you do now. And markets pretty much went straight up at that point in time. You could throw a dart at a wall full of stocks and make money in 2020, 2021. And you're just vertical now, right? That's got to end at some point. So we'll see what does happen. So far, you're down about 1% on the week. Does that get worse? Well, it's really going to depend on Powell tomorrow. If we don't get any new information, then I expect maybe we can level out and actually bounce a little bit from there. Nonetheless, if we do get a bounce in the broader markets, AMC stock, judging off of how it's performing today, up about 1%. A bounce in the markets could be really good for AMC and maybe start an even larger bounce. And Powell's going to be tomorrow. You also have Jolt job openings that will be coming out. So that's really the only thing that is happening today. I will also note that the Russell 2000 is the outperforming index. The Russell is down 0.67%. The NASDAQ again down 1.6%. S&P is down 0.87%. And the Dow is down 0.71%. The VIX is currently up about 5.5%. So you are seeing some people looking for some downside put protection, some insurance on their portfolios. What's actually interesting about today's sell-off that really doesn't make too much sense is 10-year treasury yields are down about 7 basis points. Typically, when you see 10-year treasury yields fall, that's normally a good thing for stocks, right? Because that can drive more money into equity markets. But then again, you can make the argument that if money is going into bonds, then it's not going into stocks today. So that's pretty interesting. If you do see TLT continue to go higher, that's obviously going to be a good thing. But I think a lot of what you're seeing today is actually just pre-Powell jitters. What Powell could say has everyone kind of on edge given the rally that we have seen so far. Now let's go ahead and go over all of your information and data that you need to know on AMC stock. So AMC short interest continues to rise at 12.9%. It is just almost every single day that you're just going up a little bit incrementally. Pretty soon, I think you're going to be at 20% plus short interest here on Ortex. I do think AMC stock is hundreds of percents sold short. I cannot prove that. I cannot quantify that in any way, shape, or form, but that is just my personal opinion. You do have $146.07 million currently in short positions in AMC with days to cover of 2.07. 33.81 million shares that are currently sold short with shares out on loan at 44.26 million. 1.07% costs to borrow, 65.45% utilization, and 67.28 out of 100 for your short score. Now, option activity yesterday from hedge funds and institutions, at least the data that we have here, you had 4 orders totaling $66.79 thousand with a positive order value of 55%. So that was a little bit better, a lot better than what you've seen on last Friday, and better than where we have been over the past couple of days. Now, today you have volume of 83% calls, 16.91% puts. So definitely some call activity that is taking place today. 5 times as many calls being bought compared to puts. So that's definitely a bit of a ray of sunshine, if you will, for AMC stock and hopefully for AMC stock investors. Now, for Fed policy by the end of this year, we're expecting 1, 2, 3 rate cuts. 4 rate cuts, actually. Odds are actually improving today to 4 rate cuts in 2024. That doesn't set us up in a great way heading into Powell tomorrow, because maybe there's a chance that Powell says we may not get rate cuts for a long time, or we may not get rate cuts, until, let's say, around the election, right? Past summertime. That's always a possibility. Bostic said yesterday, Fed Bostic, he's only expecting 2 rate cuts and don't expect them back to back in 2024. We're now pricing in 4 rate cuts again. If Powell is not in that camp, that's going to be a little bit of a problem potentially. So something I'm watching for coming tomorrow. We are expecting the first Fed rate cut in June. Odds of that 55%. 30.7% chance of a cut or a continued pause coming in June. So in the grand scope of things, I think today, even though stocks are down, you're not setting yourself up good for Powell tomorrow. And I think any kind of higher for longer comments may be seen as really bad news. But we'll have to wait and see. Who knows? Powell will be speaking at 10 o'clock in the morning tomorrow, but we'll go over that more in the next video. Now, for this week, you're actually seeing quite a bit of option activity starting to populate the option chain. About 5,000 calls currently in the money, 46,000 calls out the money. In the money puts at about 8,700. Out the money puts at about 19,000. So a decent amount of option activity this week. Next week is your larger week, about 4,300 for calls in the money currently. 243,000 calls out the money. In the money puts at about 31,000. Out the money puts at about 108,000. So we'll see what happens this week. Maybe we can move more this week because there's not as much option activity. But next week, you're definitely going to see a lot of option activity, and I would expect quite a bit of up and down volatility when it comes down to next week as well for AMC. Now, if we take a look at stock twits and what the sentiment looks like today for AMC, let's go ahead and pull this up for everyone. AMC stock. We do have people pretty bullish today at 56. That's not as bullish as yesterday, surprisingly, when you were at 58. Message volume a little bit higher today than it was yesterday. Yesterday you were at 47. Today you're at 49. Participation ratio at 55. So staying at higher end levels. AMC stock currently up 1.33%. I think it's pretty simple, the game plan ahead from here. If Adam Aaron, just on an off day randomly, who knows when, tells us that, hey, we're not going to dilute shareholders for 6 months, that is my personal green flag to start, or green light, green flag, whatever, to start getting into some kind of leveraged upside trade with AMC. I think that's when AMC stock really can go up hundreds of percents. I'm not expecting any kind of rally like that until that commitment happens to not diluting shareholders, or we get closer to the first Fed rate cut and it looks like we're not going into recession. If it looks like we're going into recession, even if we do get, Fed cuts, that's still not going to be great for markets. On average, markets fall about 20%, when the Fed does cut rates the first time. So, we're definitely going to be entering into a bit of a tricky situation coming up here in the next couple of weeks. Now, with that being said, the other way that AMC can rally and actually do well is if money starts to come back into our markets. If money starts to come into our markets, then a stock like AMC can do very well, and that would be my expectation. But if not, then, it's going to just take longer. If we're expecting the first cut in June, anytime now the markets are going to start pricing that in, right? So I don't know when exactly or how exactly that would happen, but eventually I think that will start to happen. So, there is that. 50-day moving average. As far as your technicals, that's going to be your level of resistance. That's currently at $4.71 per share. Your level of support, probably around $4 per share. So definitely looking at those two levels pretty closely here. And, which one do we hit first? Let me know your opinions down below in the comment section. Hit the like button as well as subscribe to the channel. Thank you for watching. Enjoy the rest of your day, and I will see you in the next one.